Hello everyone, welcome back to our channel. In today's video, we're going to focus on the startup ecosystem. We're going to try and understand why we have titled this video as the Startup Mirage, when innovation meets reality. And it's because no matter what innovation a startup is promising to bring to the industry that it is trying to disrupt, does it really translate into a profitable business? So the allure of the startups is often lies in the promise to revolutionize the industries and redefine customer experiences. We have a lot of examples. Today we're going to focus on a few of those. For example, Stitch Fix, Peloton, and RealReal. How each of those began with a mission to disrupt and lead with groundbreaking business models. But after the initial excitement has waned, stark realities of business sustainability and profitability have come to the core. When talking about Stitch Fix, it was a pioneer in the personalized online shopping model wherein it sought to transform how we buy clothes. It combined data science on one end with human judgment on the other end to tailor clothing selections to individual tastes. Despite this innovative approach, the company has found itself grappling with subdued demand and a very challenging economic environment. Similarly, Peloton was once a darling of the fitness industry. It expanded rapidly during the pandemic and became a household name synonymous with home workouts. But post-pandemic, it has struggled to maintain its momentum amidst product recalls and a very saturated market. Lastly, RealReal aimed to redefine the luxury industry by making it more accessible, making it more sustainable through a thriving second-hand market. But despite a very promising start and a growing consumer interest in sustainable fashion, the company has faced difficulties turning into a consistent, profitable business model. All these companies are facing common challenges, which is they scaled very rapidly, they have high customer acquisition costs, and they have immense pressure to continue innovating while maintaining a profitable business model. When we say maintaining, it does not really mean that we are talking about maintaining, because most of the companies are not profitable in the first place. They have done a lot of course correction because each of these companies has taken significant steps to course correct. Stitch Fix has done it by enhancing customer engagement and by streamlining operations. Peloton has done by rebranding and targeting new markets. RealReal has done this by optimizing its consignment model and by leveraging technology for better efficiency. While each of these companies has been trying to streamline its operations, but each of these companies is still facing a very uphill task, a very challenging task of becoming a profitable company. So what can we kind of conclude from all this? Now, the narrative of all these companies is very complex. It reflects a broader trend in the startup ecosystem wherein there is often an underestimation of the difficulties that are going to be involved in transforming initial disruptive potential to long-term viable business strategies. These companies need to adjust their sales, and the key takeaway from our side is that the innovation must be paired with strategic foresight and operational agility. Now, this is a very short video wherein we have tried to introduce the startup ecosystem, and we have tried to introduce a couple of companies wherein we see a lot of course correction happening, and even after the IPOs, the companies are not profitable at all, and we see shareholder and stakeholder value being diminished every day. We would like to kind of focus more on a couple of other companies, and we'll also like to focus more on a couple of companies which were able to course correct, which were able to kind of enhance their business models, scale. A company that comes to mind is Glossier, which was going downhill a couple of years or a couple of months back actually, but then it changed the CEO from the founder who became the chairman at large. There was a new CEO who was introduced, and then from the direct to consumer model, it went towards more of a wholesale model by selling at Sephora and introducing not just in Sephora US but in Sephora UK, and it has been able to kind of increase the sales of not just its makeup but its fragrance business also. And recently, I think it was just yesterday, when it also introduced a second fragrance model, which it is being said is necessary to kind of gauge more interest by strategic partners so that it can project itself as a $1 billion company in terms of valuation, so that the founder can have an exit in this terms. So this is just one of the companies which is really doing very well. I'm sure there are a lot of other examples, and we would love to discuss that with you. So for now, hope you've enjoyed this video. Do stay tuned in for more, and if you want to read all about it, do it at pallavisehgal.com. Thank you.